Hello, everybody. Thanks for taking the time to join us on this webinar, Navigating Through the COVID-19 Crisis. We put this together for you, our customers, as a way for you to get some answers and some resources as you're trying to navigate your business through these times. It is incredibly difficult and unprecedented, and we thought any way we could help you, we wanted to do that. And by putting this panel together and giving you the chance to listen to this panel and also ask questions to this panel, we thought could be valuable. So you're going to hear from legal experts from Orr & Reno, that's our law firm in Concord, New Hampshire, who have become experts in the rapidly changing government response to this with the monies that are available through small businesses and so forth. So that will be on here, people from Orr & Reno, as well as our CFO, Amir Rosenthal, and our Chief People Officer, Tracy Spanenberg. And Tracy's here to also answer some of your HR-related questions about how to deal with your people through this time. So we thought this would be a valuable resource for you. We hope it is. And as I say to you all the time, thanks for all you're doing. And please remain safe and healthy as we get through this time.
Hello, everyone, and welcome to the Granite Group's Navigating the COVID-19 Crisis webinar. My name is Tracy Spanenberg. I'm the Chief People Officer of the Granite Group. And on today's panel, we also have Amir Rosenthal, the Granite Group CFO, and Lindsay Nadeau and Tony Sayas, attorneys with the law firm of Orr & Reno. And behind the scenes, we have Brad, who's our VP of Marketing, and Coburn, who is our Director of E-Business, and they'll be running things from the back end for us. So as we mentioned in the invite, we know how stressful this situation is for everybody everywhere, but particularly for those of you who run small businesses. And our customers are made up with many people, but a lot of small business owners. And hopefully you can use some of this information in the webinar to help you navigate through this crisis. And before we get started with the webinar, there's a few quick notes on some housekeeping matters. So you're all muted right now. And that's to cut down on some background noise. If you have a question, please use the hand icon that Coburn's showing you, and we'll unmute you and you can ask your question to the group. And we're going to do that in between different sections of the presentation. And feel free to use your question icon over on the, I don't know where it would be, where you're seeing it, but for me, it's over on the right. But you can also type your questions in and we'll get to those in between the different sections. And that's about it. So without further ado, over to Lindsay and Tony to start the presentation. And thank you everyone for joining us.
Great, thank you. Let me pull up our slides here.
Yeah, so we have about 20 slides we're going to go through. I'm going to take the first half roughly, and then I'm going to switch over to Lindsay, and then we want to leave ample time for questions at the end. So roughly the presentation is broken up into two parts. The first part mostly on new SBA small business loan programs that have just been created in the past month in a response to this crisis. The second half on human resource compliance issues, especially involving new federal laws that will impact employers. So there are a couple new federal small business loan programs that we're going to be talking about. One that probably most people have heard about, it's been all over the news, this new Paycheck protection program, a loan program. It's 2 weeks old, signed into law exactly 2 weeks ago. Also, people referring to it as PPP. Another SBA loan program that's been developed in response to this, economic injury disaster loans. We'll touch on it very briefly. Part of that also involves a small emergency loan advance, which can turn into a grant of up to $10,000. And there are also some new tax credits that have been enacted in the past month that we'll just briefly touch on. So the major thing that everyone is talking about is the Paycheck Protection Program, these new loans, and the major thing that is so attractive about them is that they can turn into a grant. So you can take it out as a loan, but if you use the money in a certain way, then it can entirely be forgiven. So essentially turning into a grant. So as I said, it's only 2 weeks old. The law itself, applications for loans have only been live for the past week. as of today, any small business should be able to apply for this loan. Today was the first day for sole proprietorships and independent contractors that don't have any other employees. But that is now should also be live. So everybody on this call who has a business should have, if meeting certain criteria, should now be able to apply. In the law itself, $349 billion were appropriated by Congress for this program for emergency loan funds. The policy goal is to keep people employed with an initial term through June 30th of this year. So it's a temporary program. You have to use the money quickly. It should not be a problem for most people right now. Again, if you use the money in a certain way, you can get forgiveness. Another huge advantage is that there are no personal guarantees or other collaterals required, unlike other SBA loan programs. There is talk in the news about adding more money, that they think that the $349 billion will maybe all taken up in the next couple of weeks. I think that as of right now, of the $349 billion, over $100 billion has already been delegated to certain borrowers. So it is going fast, but there's talk in Washington about adding money, and the rules could change. That's been one thing in the past 2 weeks. Every overnight rules can change, and so it's been a real challenge to advise people on exactly what the rules are at any given moment. So right now, who is eligible? It's got to be a U.S. business. I assume everyone on this webinar is a U.S. business. The key thing is that you have employees in the U.S. Even if you have one person working remotely from another country, it can make the application process more complicated. Another general rule is you have to have under 500 employees. I again assume that most folks on this webinar will meet that threshold. There are exceptions. If you do have over 500 employees, there are certain exceptions, so it's still worth thinking about whether you could apply. There's been some kind of questions about independent contractors and who should apply. If a business generally has employees and independent contractors, can they include the independent contractors and apply on their behalf? And the answer is no. An independent contractor needs to apply for themselves. And the same, sometimes the terms are used interchangeably about a self-employed person or a sole proprietorship or an independent contractor. I view those all as the same thing. There are some other little eligibility rules about whether someone has a pending criminal case against them or has been convicted of a crime in the past 5 years. So there are other special rules that are not unique to this program, but apply basically to all SBA programs. So then the next big question is, all right, if I'm eligible, how much can I borrow from this? And this is a little bit of a complication. And so the technical answer is you calculate payroll costs for a certain period in the past. It can be the most recent 12 months that have closed, so basically April 2019 through March 2020, or a lot of people might not have that full data, so they're accepting just 2019 full year data. And so you take that data and you look at it and you figure out what the payroll costs are of the business. And so there's many things included in payroll costs. It's the cost of compensation actually paid to the employees. So that's what they would get, in their check. So it would include amounts that are withheld on the employee side. It does not include amounts held on the employer side, like employers part of FICA. It would also include any kind of vacation, family leave, sick leave, stuff like that. Dismissal or separation allowances. I haven't really had that come up yet. Also, health insurance benefits, including dental benefits if an employer pays that, and retirement benefits, for example, like a 401k match, and state taxes paid on the employment, like state unemployment tax. So those are generally all included in payroll costs. For self-employed individuals, or for example, let's say someone, is a member in an LLC, it can be more complicated to figure out what those payroll costs are, but it can be worked through. There are some exceptions. Okay, so as far as the compensation, as far as like salary, wages, whatnot, you only can take into account up to $100,000 for any given employee. So that's roughly like $8,600 a month. So if they were paid $125,000 a year, you'd only look at the monthly part that adds up to $100,000. But you could add as well all the insurance stuff and retirement contribution stuff. So it can be more than $100,000, but it's just up to $100,000 really of cash going to the employees. There are some other programs Lindsay is gonna talk about a little later about sick and family leave, and you cannot take credits for that sick and family leave new laws, and also include that amount as part of your compensation on this. All right, so if you figure out that you're an eligible borrower, you figure out how much your maximum, there's a $10 million cap. I don't think that that's gonna really impact too many people. How do you apply? Okay, you don't apply directly through the SBA. You apply through a bank. And a lot of people already have a banking relationship. So who your kind of small business lender would be. Some, especially smaller businesses, maybe a self-employed person, they just use their own regular, checking account and they run their whole business through that. And may not have that banking relationship. We were informed yesterday, it's been a challenge because banks are really focused on their own customers right now. But Provident Bank is accepting applications from folks that are not currently their customers, and there is a website. It's up there on the screen, or you could get in touch with us after, and we can send you the link to the website. I haven't actually had a application process through it, but I did go to the website, and it does look like a legit way to go about this. There are various certification requirements that have to be sworn to as far as this program goes. We'll go through the application and we'll touch on it in a little more detail. So initially, when the loan is taken out, it's going to be taken out. It's a 2-year loan at 1% interest. Hopefully, for most borrowers, a lot of that is completely forgiven and doesn't have to be repaid. It is certainly possible that some amount isn't used for the intended purposes initially, or not enough is used for that, and so it might have to be repaid. And so that will be the amount that the term and the interest rate on any amounts that have to be repaid. In order to go through the application process, you're going to need to figure out that monthly payroll costs and provide supporting documents to the bank. They're not going to go through and completely recheck all of your work, but they have to at least look at it and understand where you got your number from. As I mentioned at the start, there are more than one SBA loan programs that have been created due to this crisis. You can coordinate those SBA loans, but you cannot use them for the exact same purpose. But that is a possibility if you need to borrow more than what you might initially be able to through just the PPP program. So I think it's helpful to go through the application. I mean, this is on the PowerPoint, and I wonder if we can get the PDF form. So it's a very short application form. It's 2 pages, and most of it is checking a bunch of boxes and initialing stuff. There's another half page of instructions and about a page of required disclosures that you have to promise that you read and that you're going to abide by. They have to do with a bunch of federal rules that you need to agree to live with if you're going to take this money. So at the very top left, you're going to have to check one of these boxes about what type of business you are. You know, if you are a C corporation, that's easy. If you're an S corporation, that's easy. It's harder if if you have an LLC, you check that box. It's harder if you're a sole proprietor. There's a sole proprietor box. There's also an independent contractor box, and there's also an eligible self-employed individual box. I couldn't tell you why those are three different things. Check one of them. It also asks upper right-hand corner if you have a DBA, doing business as, or a trade name for your business. Otherwise, you go down with your business legal name. If it's just an individual, self-employed individual, you just put your name, business address, an EIN or social security number, contact details like phone and email. And then you get into kind of the more complicated part where you are going to enter a number for your average monthly payroll. So that's going to have to go back into the past and look through your records and calculate that. It's kind of a joke on the instructions. It provides an estimated time to complete this form and gather all the required information. It says it should take 8 minutes. I think it will be more like 8 hours. So I don't know where they gathered that number from. Once you figure out your average monthly payroll, then you're going to generally multiply that number by 2.5, and that's the amount you will be able to borrow. You also enter in the number of employees. They generally want to see that it's under 500, although there are exceptions. And you will check one or more of the boxes for how you're going to use it for eligible uses, which are for payroll, a lease or a mortgage payment, only the interest part, not the principal part, for the business itself, and utilities. There's another box. I don't know what you might possibly put into that. You also need to list each 20% or higher percentage-wise owner of who the borrower is. If it's a sole proprietor, that's easy. It's just one person. If it's a 50-50 owned LLC, you put both in. But if there's more than that, you're going to have to add an attachment and indicate the information for each of those folks. You then start to get down into some of these boxes that you check. And as I mentioned, some of them you will be denied if you check a yes box, like if you are currently ineligible for whatever reason to apply for participate in certain federal programs, or if you've another one is, has the owner or the company itself ever obtained a guaranteed loan from the SBA or another federal agency that is delinquent or has defaulted in the past 7 years. Another one of these is if the applicant is in bankruptcy, you're going to get denied the loan. Otherwise, you will have to, there are something called affiliation rules. And so they look to that 500 employee count, not just to the actual applicant, but also to commonly owned or controlled companies. So if someone owns a factory and there's 400 employees there, and they also own a car dealership and there's 125 people there, you don't say, yeah, I have 400 employees, you say that they have 525 employees. Probably won't apply to most people on this webinar. So there's also the questions about criminal type of history, and it wants a certification that the principal place of residence of all the employees is in the US. And then we can move to the next page. And so here, there's a whole bunch of other certifications. I'm not going to go through every single one of them. Everyone has to read them and state that they understand them. You have to, swear under penalties of perjury and fraud and, potential jail and huge fines that, you're going to agree to do all this stuff. One of them is, to the extent feasible, I will purchase only American-made equipment and products. Something that some people maybe haven't been paying too much attention to. Another one is that current economic uncertainty makes this loan request necessary to support ongoing operations of the applicant. There's been a number of questions about, what exactly that means, and, what if you have some cash right now? Do you have to spend all that before you could, dip into this money? And then there are, on the next couple pages, there's a bunch of other rules that you need to agree to abide to, like, certain civil rights rules, certain OSHA rules. You're going to agree that, your information can be shared. If you're an individual, the SBA can run a criminal background check on you. So there are, the intent is to get this money out as fast as possible, and it's a pretty streamlined application form, especially unlike other SBA loan programs, but, you do have to carefully read it and agree to a bunch of strings. So, one of the great advantages of this program is the potential for loan forgiveness. And so basically, and this is evolving, and there is not at this moment sufficient guidance on how this works. No one yet is eligible for the loan forgiveness. But basically, you would borrow this money, you calculated it based on, 2.5 times a certain amount of payroll from the past. And so the forgiveness is supposed to work that as soon as you get the money from this, that will begin an 8-week period. And during that 8-week period, you're eligible for the eligible costs that you use the money for in that 8-week period, for forgiveness for the use of the money in that time span. So the eligible costs are things like payroll, mortgage interest, rent, and utilities. However, they have said, hey, we're not going to allow forgiveness for any amount that is over 25% used on non-payroll stuff. So if you wanted to use half of it to pay your rent, you're still eligible for forgiveness, but you're not going to get forgiveness on the amount, the 25% of it that was kind of over that non-payroll cap. And payroll here should be the broader definition, which includes, cash paid to employees plus the benefits. They do have rules about if you've laid people off, that they want them rehired by June 30th. Those rules are not yet very clear. If you say that you're going to use the money on payroll, then presumably you're paying people, and so presumably you haven't laid everybody off. But it's certainly the case where you might lay a few people off, and then you have to figure out, doing the math about, hey, am I going to spend enough money on payroll to get the loan forgiveness that I'm looking for here? There are some exceptions where if you hire people back by June 30th, 2020, then some of those rules that would limit forgiveness wouldn't apply, but you still actually need to use the money on those eligible costs. So these rules are being currently developed. Everything's happening very, very quickly, and not everything is entirely clear at the moment. There's a similar rule if you reduce salaries and wages from what they were before. I know that a number of companies have done that and kind of made across the board pay cuts and maybe even higher pay cuts for management. That reduction only applies to people who make less than 100,000. So if you chop senior management down from 200,000 to 100,000, they don't care about that. They care more about the rank and file. So we still need information on this loan forgiveness, but it is a gigantic benefit to one of these loans. Now, there's a bunch of there's the statute itself, and SBA has put out some rules by this time. There are some frequently asked questions. There is information being put out by SBA, including the New Hampshire district office that I'm in touch with. Oren Reno is putting information on blogs. Other folks are as well, different CPAs. If people have questions, we can try to help answer those questions for you. We're also in the process of finalizing some Excel sheet that helps calculate what you would be able to borrow and also what should be forgiven. Those are still kind of drafts, but we're happy to share them to try to help people figure this stuff out. We know it's complicated. So that is the PPP loan program. There are actually some other, one other especially program that we've talked to clients about. It's called the Economic Injury Disaster Loan Program. This loan program came out before the PPP loan program. And so ever since that PPP loan program came out, a lot of the interest has shifted away from this. But it is still, it still can be an important tool for some people. The key thing is you can't take out one of these EIDL loans and the PPP loan and use it for the same purpose. However, it should be possible to take out one of these loans and use it for a different purpose. For example, it has a broader array of things that this loan can be used for, including things like accounts payable and other fixed debts. So you can't use a PPP loan for that. So if you have those other expenses, you should be able to take out an EIDL loan. This one has a $2 million max. It's not tied to things like the 2.5 times payroll formula. It's basically looking at what your expenses are going to be coming up, and that's what you should be able to borrow. It has a higher interest rate, has a 3.75 fixed interest rate, up to 30-year term. Key gigantic difference is this generally is there's no forgiveness here. It is possible when applying for one of these loans that you can request up to a $10,000 immediate grant, and that part does not have to be repaid. So to say there's no forgiveness isn't exactly true. If you get that, it's been stressed by SBA that the law provides for up to $10,000, but they're not really seeing that that's what's happening. I think that people are actually getting a smaller amount as far as that emergency upfront tranche. So there are no personal guarantees for loans $200,000 or less. No collateral requirements for loans $25,000 or less. You need to have been in operation, by January 31st of this year. Generally shouldn't be a problem for most people. It is more complicated. The application process is much more paperwork required. Much more kind of backup documents need to be provided as far as getting one of these loans. If anyone is interested in one of these loans, I have a presentation that was put out by a different SBA office that really is pretty good, and that would be a great way to kind of learn more about this EIDL loan program. Finally, there has been other legislation passed recently, non-SBA, non-loan incentives, including tax credits for employers. So one tax credit is the employee retention tax credit. Honestly, most employers that are eligible for a PPP loan would much rather go that route with potential forgiveness than monkey around with tax credits. And the tax credit is pretty limited. It's really a $5,000 max credit per employee. You got to be paying them their salary in order to get the tax credit, which is going to be much more than the $5,000 credit. But some employers aren't eligible for PPP loans. I've also seen a calculation that if your average employee compensation is less than $24,000 per year, then you could be better off taking these tax credits than the PPP loan, even with the forgiveness. But you kind of have to do the calculations and model it out to see which is going to be best for you. There are different rules for employers that have 100 or fewer or more than 100 employees, and that can make a big difference on how much credits you might get. You need to have had your operations fully or partially suspended due to COVID-19, or gross receipts declined by more than 50% when compared to the same quarter in 2019. So employers can do that calculation now for the first quarter of 2020. You won't be able to do that calculation for the second quarter until sometime in July. So there is uncertainty with these credits. There were also some additional tax incentives as part of this CARES Act that was enacted 2 weeks ago, including potential delays in paying employment taxes until 2021 and 2022, modification of net operating loss rules, and modification of excess business limits for pass-through businesses. These are all kind of technical tax things that I'm not going to spend a lot of time on, but just to know, hey, there are some other things out there that could help employers tax-wise.
Before we move on, did we want to take any questions?
We do have a few questions. We have a question from Maura. I am going to attempt to unmute Maura, and she can ask the question herself. If it doesn't work out, I will read her question for her. Maura, are you there? Hello?
Okay, am I unmuted?
You are unmuted.
Okay, hi. So we have applied for the SBA PPP loan. We've applied for about $65,000 to cover about 6 employees for this period of time. But the part I'm having a hard time with is if the federal taxes are not going to be forgiven, then it appears that it's going to cost us about $11,000 to pay these people during this time. Because those would be the federal taxes due on that money, which would normally come out of the employee's check, at 50% and and then we would cover it also. So I'm just having a hard time understanding why the taxes were excluded from the forgiveness.
All right, so a couple of things. I should say, first of all, the amount borrowed and forgiven is not going to be included as taxable income. It's slightly different, I think, than the question that you had, but I wanted to put that out there. Another similar point is it is unclear to the extent that you get this money that you borrow and then it's forgiven and it's not taxable income, whether you will be able to deduct amounts that you have used that to pay. Otherwise, you could actually end up, better off even than just with the money, because you're getting this free money and getting a tax deduction. So to the question of employment taxes, which I think it really goes to, the statute itself specifically provides that in calculating payroll costs, you do not include the employer's part of the FICA. So as you keep paying your employees, you would continue the typical tax withholdings. You would take out their federal income tax and their employment tax. Now all of that is coming out of their normal base compensation. So they may not get all that cash, but it still should be included as part of the payroll. And so the issue is, well, it's true that the employer portion of the payroll taxes, FICA part, it is cash leaving the pockets of the employer. That isn't going to the employee. It wouldn't be going to the employee. It was just a policy decision. I don't think that there was maybe a great amount of logical thinking about it. Maybe the government's view is we didn't want to send money to people for paying the employer portion of FICA only for them to send it right back to us. But this law was enacted so quickly. There was no time for much debate or at all. If it had taken longer, people might have, thought more about it. That's really the best I can say, as to why that's the way the program works. But the rules are quite clear that the employer portion of FICA is not included in the payroll cost calculation.
So I think just as a follow-up question then, so even though we're construction, we are in Vermont, we can't have anyone working, so we're not getting any markup or getting any income ourselves, we are still going to be paying, maybe my number's $5,000 or $6,000 out of our pocket, even though we have no income coming in order to keep these employees, paid through the PPP. And that's sort of the bottom line, right? Is that it is going to cost us money to enact this PPP loan.
Yeah. I mean, I guess that, net, you borrow a bunch of money, you can use it on certain things, but you can't use it on that particular thing. So, in that sense, yes, it will cost money. You can use, some amounts on things like mortgage interest or rent and utilities, and that may end up, being an amount larger than the amount of the employer's portion of, FICA. So that is kind of a calculation issue.
Okay, yeah, I mean, we don't have any of those costs, so it's, it might just be a very particular case that just doesn't work out for us.
Yeah.
And then, so what are the advantages of taking that PPP versus just having all your employees go on unemployment? What's the advantage to the employer?
Right, and I mean, honestly, it's a math problem, and you can, run the numbers and see, okay, at the end of, if we take this government money and we use it for these things, and at the end of the day, here's how much money we're left with, versus if we don't take this money and we lay everybody off and we don't incur those costs, and then that's how much money you're left with on that side. And, on the one hand, you have a workforce still in place when things go back to normal, and on the other hand, you may not have a workforce in place when things go back to normal. I mean, I think the policy in DC is, hey, we'd rather have these people not on unemployment who still have a job in theory, even if they're not doing anything, then everyone gets laid off and goes on unemployment, and then there'll be additional chaos. But, again, these solutions are coming so fast. If there were months to debate about it, it may end up in a different place, but, it just happened really, really fast, the enactment of this.
Okay, thank you.
Mm-hmm.
Okay, and we have another question from Sean, so I will be unmuting Sean now. Hi, Sean, are you there?
Hi there.
Shauna, sorry, Shauna.
Yep, it's actually Shauna, but yeah, no worries. So yeah, I was actually just wondering, do the payroll costs that you would calculate, would it actually include member draws?
Well, that is a very complicated. So I think the question is, does it include member draw as far as the compensation goes? That's a very complicated issue that we don't have a firm answer yet on how you do that. For example, an LLC tax as a partnership. But I personally think the statute is vague, and it says, compensation and similar costs. Okay, I would say a member draw is a similar cost to compensation. So I would go ahead and prepare an application, and make it up front with the bank that that's how you got to your calculation. I mean, I think that that's legitimate.
Okay, and also regularly paid subcontractors. So like we routinely have some people that are not necessarily affiliated with our business, plumbing, like we have a carpenter basically that we regularly work with that is paid as a subcontractor. Would that
so the rules are clear. Subcontractors that are not employees are not included. And moreover, that the subcontractor itself is eligible to apply for their own PPP loan, and that is what they should do. This is the guidance out of SBA.
All right, perfect. That's all.
Thanks.
Okay, we have another question from Dean.
First, I just want to thank you for putting on this webinar today. It's great. when we have to apply for forgiveness, how is that going to happen? And since we've already paid out all of the salaries and wages to our employees, what if the rules change and we don't get all that money back, and that's all been, out-of-pocket expenses?
Yeah, I mean, this is an emergency program that is, being developed on the fly, and there aren't really rules yet on the forgiveness period because no one yet is eligible for forgiveness. It won't happen until at least 8 weeks from now when people start becoming eligible. But there is a statute. I mean, there's the law that was passed, and that law, it does have the provisions for how forgiveness is supposed to work. I think honestly, the SBA banks are mostly concerned about this because they're kind of on the hook. They're kind of using their own money right now to make those loans that they assume that the feds are going to forgive and then reimburse those banks for. But your point is that, yeah, it sounds great, but it seems like there could be some risks because we've already spent the money, it's out the door. Yeah, I mean, that is true. I will say in Washington right now, all the action seems to be how can we add more money to this? This is way better than paying people unemployment, and it's only a matter of getting some political compromises to put more money into the program. It doesn't seem like there's concern that, hey, there's acknowledgement that there could be waste, fraud, and abuse. But we're in such an emergency that people are kind of acknowledging that and then still saying, how can we add more money to it? So, we're personally advising clients, yeah, you should definitely, apply for this. Notwithstanding that, we don't fully know how the forgiveness is going to work yet.
And one other thing I would add to that, Tony, is as part of the forgiveness, documentation is going to be needed. So to the extent that you are paying anything out, just try to keep as much documentation of what you've done that you can.
Absolutely.
Thank you.
Okay, and another question from Sean. Sean, you are self-muted, so you'll have to unmute your microphone in order to ask your question.
As Sean's doing that, I just wanted to add for those companies that might have a payroll company, that there are some payroll companies that have a report that makes this process a little bit easier theoretically. So if some of our customers or those in the webinar do have a payroll company, check there first before doing the calculation.
Yeah, and there are rules that have come out in the past week about use of payroll companies, and that's acceptable, and that a bank should be able to rely on that when a borrower uses that information as support.
Okay, Sean, you are unmuted.
Perfect. I just had a question. Can everyone hear me now okay?
Mm-hmm.
All right, a question on the June 30th period. The one gray area we're seeing amongst a few others is just the rehiring of headcount and payroll. And I've read a few different things that it doesn't matter necessarily who you rehire as long as you get back to the prior numbers. I was just curious. I know a lot of this is just real-time fluid, but are you seeing anything, Tony, on kind of wording around that, the rehiring, who needs to be rehired and what previous payroll you need to get back to for the forgiveness? Is it 90%, full 100%, if you follow me?
Yeah, I mean, so again, this is an area that's evolving. So the statute itself provides that, okay, we acknowledge people have laid people off. So long as you hire back, and I'd have to look at the statute itself. I don't think it says the exact same individuals. It probably looks to a full-time equivalent head count.
Yeah, that's the way we're interpreting it. It's just getting back to that full-time equivalent head count.
Yeah, I think that's probably the way it was drafted. By June 30th. Then, notwithstanding that you may have had a reduction, that's not going to be considered for forgiveness. However, what's happened initially the statute was passed, there were no rules, it was vague. And since that time, and even on the application, it makes clear that you need to use these funds for certain purposes, including 75% or more on payroll costs. So for example, if somebody were to lay off everybody, pay a bunch of rent and other expenses, and then hire everyone back on June 30th, in theory, according to the statute, they should be in the clear, but they will never have spent 75% on payroll. So they won't get any forgiveness. So it is a balancing act between, well, I know I can't, furlough everybody because I won't spend 75% of my payroll. But it should be possible to say, well, we're going to have select people, and we're not going to hire them back, or we are going to hire some back. We will hire some back right before June 30th, and we can hit all the required percentages. But until those forgiveness rules come out, it is a little bit ambiguous as to how, when you make a forgiveness application and you say, well, here's how we spent it and here's what I did, and whether you'll get full forgiveness. It's just a little bit unclear right now.
Sure. No, I appreciate that.
Should we maybe move on to Lindsay's and then do more questions?
Nope, that's all the questions we have at the moment. So let's move on, and then please keep the questions coming, and we'll answer them after the next section.
Great. So next, we're going to talk about some of the human resources issues that have come up with new legislation and expanded existing unemployment benefits. So the federal government passed the Families First Coronavirus Response Act. It takes effect according to the Department of Labor regulations as of April 1st. There's two really main components. There's emergency paid sick leave under the Act for certain reasons, and then there's also emergency expanded family medical leave under the Act. We did include a hyperlink to the notice requirement. There's a poster for federal workers and a poster for non-federal workers that do need to be posted in workplaces. So wherever you're posting your OSHA poster, tack this right up next to it. So first, for the emergency paid sick leave, this includes employers with fewer than 500 employees, and it applies for all employees, whether they're full-time or part-time. It's in addition to any other leave that is already offered or that your employees have already accrued, paid time off, other sick leave, vacation, that sort of thing. So there's certain categories for qualifying for paid sick leave under this, and this is only applicable if you are unable to work or telework, which is an important piece of this. So if you need leave for these 6 reasons and you're not able to work or telework, your employees would qualify. The first is a government isolation or quarantine order. That includes a shelter-in-place order. Being advised by a healthcare provider to quarantine, or if you are seeking medical diagnosis because you have symptoms of COVID-19 and are in the process of getting that looked into. The next 3 are really for caring for someone else. So you're caring for someone who is under quarantine or government or due to a health provider quarantine, or if you're caring for a child due to school and daycare closures. Certainly a lot of families are facing that right now. And also there's this broad catch-all of circumstances similar to any of the above. No one really knows what that means yet. There's no guidance out, but the Health and Human Services Department supposedly is coming out with that guidance soon. So these are the categories for which this expanded paid sick leave would apply to. The amount of leave is 80 hours, and it's prorated for part-time employees. And there are, the employees are subject to their normal pay rate, but it is capped. So it's capped if it's for those first 3 reasons, caring for yourself, it's capped at $511 a day or $5,110 per year. And if it's for caring for someone else, you're entitled to $200 a day. The cost of the paid leave for the employer is recouped through payroll tax credits. And what's important here is that the leave is job protected. So the worker is entitled to returning upon completion of their leave if they're able to. For the emergency expanded family and medical leave, this applies in more limited circumstances. So again, it applies to employers with fewer than 500 employees. There is an exception for employers with 50 or less employees that we'll talk about in a little bit. All employees have to have worked though for 30 days for the employer. So this would only apply to those employees who have been on your books for 30 days. The really only qualifying reason to take this leave is because you are unable to work or telework because you have to care for a child because of a school or daycare closure. The amount of leave is up to 12 weeks, which is the same period as traditional FMLA leave. What's interesting is the first 10 days or the first 2 weeks are unpaid. An employee can choose to use their accrued paid time off, vacation days, or sick days that they have under the employer's policies during those 10 days, but the employer cannot require them to take that leave simultaneously. The remaining 10 weeks is paid out at 2/3 of their regular pay, although there is a cap at $200 a day. And similar to the traditional Family Medical Leave Act, notice is required to be given by the employee as soon as practicable. And that can be verbal or in writing that they need the leave. They have to say for what reason they need the leave and that they're unable to work or telework because of that reason. The cost of the paid leave, again, is recouped by the employer through payroll tax credits. And again, it is job protected. Interestingly, for employers with fewer than 25 employees, reinstatement may not be required if the position itself was eliminated due to COVID-19 reasons. The Department of Labor has issued some guidance saying that smaller businesses with less than 50 employees may be exempted from the Family Medical Leave Act requirement if it would jeopardize the viability of the employer to be an ongoing business interest. So it's unclear exactly what that means, but if it would jeopardize the viability of the business, that's something to look into, and more guidance hopefully will be out on what that means soon. In addition to expanded paid leave, a lot of states have increased their unemployment benefit eligibility to include persons who are self-employed. And then in addition, the Federal CARES Act, which Tony has talked about, also expanded benefits. So I think I saw a statistic this morning that 16 million people have applied in the last couple of weeks for unemployment benefits. So this really is going to impact a lot of people. A lot of businesses are making those calculations that we talked about whether it makes sense to try to take out loans and weather the storm, or if it makes sense for employees to go on unemployment. And so in doing that calculation, keep in mind each state will have its own minimum and maximum unemployment benefit amount. And then in addition to that, the CARES Act adds an additional $600 per week of unemployment compensation. This is completely through federal funds, and it's automatic whether an employee is on unemployment due to COVID-19 or not. It is limited to running through July 31st of this year. But for those people who perhaps were already on unemployment before this all started, there is an extension by 13 weeks so that instead of only being able to collect for 26 weeks, now employees may be able to collect for a total of 39 weeks. And I think that's pretty much it. I know that's a lot of information, but those are some of the highlights. Do we have any questions?
We do not on this topic.
Okay, well, this is Amir Rosenthal, the CFO at the Granite Group. We are right at our 1 hour time limit. We want to thank all of our customers for attending and asking those great questions. And we also want to thank you for your support of the Granite Group. during a very challenging time for all of you. I want to also thank Brad Dupuy and Coburn Flannery for putting all the mechanics together to turn this around very quickly and put this on. Also, thank you to Lindsay Nadeau and Tony Sayes at Warren Reno for their valuable advice over the last hour. We hope this was helpful to you. As Tracy said at the beginning, there's going to be a replay available for those customers who were not able to attend in person. We at the Granite Group remain here to support your businesses through this process. And finally, we want to wish all of you a happy Easter. This may not be a traditional family gathering weekend under the circumstances that we're in, but we hope it is a restful and peaceful holiday for all of you. So thank you again for attending, and we look forward to continuing to work with you through this very challenging period for all of us. Thanks again.
Before we go, there's one more question that did come in. The person cannot unmute themselves, so I'm going to read it for them. I think it'll be a quick one. The question is, once you receive your payroll loan, does the clock start right away? In a state that has a stay-in-place order until May 15th, will we pay these people to stay home?
Yeah, well, the forgiveness period is the 8-week period after the loan is received. And once a lender approves the loan, they have 10 days to actually get the money out the door. So, we think that the loan funds are going to start really actually flowing in the next week. And so for a lot of people, the loan, for example, people that could apply last week is when the application period opened. We think that roughly the 8-week period of forgiveness will be May 15th to like June 10th or something. And obviously that will still cover a lot of the stay-at-home order. And we don't, it might be extended too. So yes, it could definitely be used for, paying people who are home.
Okay, that is it for questions.
Well, thank you again, everybody. Sorry,
Thanks
Tracy. You see Tony's and Lindsay's email address are on this last slide. And then at the very bottom of the slide, there's an email address for any general questions you may have about everything that's going on right now that goes to a group of people at the Granite Group, and we'll respond to that right away. Tracy.
Great. Thank you all. I just wanted to thank everyone again and thank us, Tony and Lindsay and Amir and Coburn and Brad and all of our customers. And we're happy to help and reach out if there's any questions that you have. Thank you.
Thank you, everybody. There will be a recording of this on the website later on the same registration page, and have a great day.